Well, that's good. That's good. Yeah. Well, I wanted to have a little chat with you and looked over some of your stuff, and I appreciate you sending me, things over and questions and all that, just like usual and everything. So I'm going to do a little different approach here with you, just to see how your thought processes are going forward. You tell me where you think you are right now, in the good and the bad, and I appreciate you're doing a journal on your trades. That's great. But when you're dissecting your trades and stuff, just go through a little bit of what you're thinking and from entry to exit type things, because I want to see, without seeing you and being there minute by minute, just go through what you do and how you go about it and when you're doing it and stuff like that.
Okay. I've got Rebecca here. Hold on.
Hey, Mark. How are you?
Hi, how are you?
I'm doing good, and I think of you often, and I just want you to know I'm still on the team. I'm raring to go, so we're going to get this.
Well, it's good to hear from you and everything. So anyway, every time I see a cupcake, I think of you.
You know what? That is the highest compliment you can give me.
It's so funny. So anyway, I still got my mug down there in my trading room and everything. So
Well,
I think
good.
about you often.
I hope it makes you smile, and I want you to know we do think of you constantly as well. And I want you to know we've thought of you and your family so much recently. We haven't forgot you, and my heart's been with you. I know your dad was one of your best friends, and I totally can relate with that, and I'm sorry for his loss.
Well, thank you very much. I really appreciate that. It's been a bad 3 months. My dad, it was 3 months ago when it happened to him. He had a heart attack, and he just kept spiraling out of control, and it just every day was a little bit worse. That's what it amounted to. You always hope people kind of stabilize and go forward. I really thought he could come back around, and at the very end, I was with him day and night, and but I did everything I knew how to do, and which isn't much, I guess you'd say. You feel how helpless you are, but anyway, it was for the best at the end, because he had deteriorated badly. I really empathize with people that have loved ones that are laid up for maybe a year, 2 years, bedridden and things like that. And my dad didn't even know who I was for the last 6 weeks. That was pretty tough to take, and everything. And but I appreciate your sentiments. Thank you a lot, and it's just got to go on with life. That's what it amounts to.
Yes, and it's never easy, but I understand that, and it's not easy no matter how old or how, if they were suffering, you don't want them to suffer, but, you'll never, stop missing them, that kind of thing. So, but we're thinking of you, and we do miss you, and we do plan on at some point, whether it's business or pleasure, us seeing your face again, and Jill and Ryan, and we still think of that week as life-changing.
Well, that's why I was asking Greg if you guys ever came back here. I didn't know how often you came back. I'd love to see you and everything. And if you're coming back this spring, it's beautiful here in the spring. You won't have bad weather and everything, so that'd be wonderful to see you guys. So we'll just have to make it happen.
That's right. Yeah. That's right. So, and we appreciate your time today. I'll just sit and listen, but we love your input, and we appreciate it. We want you to know that.
Well, and I enjoy talking. I want to help you guys and everything as much as I can. I'll be more available now than I have been over the winter, but I really like you guys and want to help you to progress. It takes time, and you just got to stay the course.
Yeah. Well, real quick here. When I first left there, I remember coming back here and telling Rebecca, like, okay, Mark didn't really give me a system. I think the biggest thing I got out of being there, and I was bragging on this, I said, is that go for 3 point, 6 point loss, kind of the and having the standard, same number of contracts. And I was so excited about that. I thought That's what I went there for that week. And yet, she would ask me, well, are you doing what Mark said? Are you doing the setups that Mark said? I said, well, Mark didn't really give me a setup. He said, well, if something moves 10 points, then you look for a point of entry. And, if this, then I said, but there wasn't really a setup. And I'm just kind of giving you a quick progression to where I am here, and in going back and listening again to that Thursday when we went over the algo trades. That is the setup. That is the system. Going over those algo setups. There's not a hard and fast. If this candle prints, then you do this type thing. But that is the setup. And that's what I was that's what I was ignoring or missing or not paying attention to or not doing. And when you asked me to go back and submit all my trading journal to you, that big section that I said that was deleted that I had to reconstruct. I was embarrassed of that section. I mean, honestly, I was. That was. I don't know what I was doing. I don't know. But that section there that I deleted out of my trading journal, I didn't even want to acknowledge that happened, and that's not the right way to do it. You've told me, and I should know this, that when I have a loss, that's the best opportunity to learn, and not just deleting it out and ignoring it. So to come back around to where I am here today, and I'm using the word system as to say what's an entry point, what's a 75% or better entry point, and like I said, I didn't acknowledge or realize that you had given me a system, which is the algo sheet that we went over there. And so I had been evaluating different things, and I still am making the amateur mistake of it'll work for a while, and then when it doesn't work, then I get afraid of it, and I let that system go and don't come back to it until later, and then jump in and out. Case in point. As of Monday, I had the first pivot back towards the central pivot that I was looking at, and it was at one point it was like an 83% system, and then I just took then it had four losses in a row, 4 stop outs, and that dropped it down to a right now it's sitting at a 67% system. So it went from an 80 something down to 67. In just short time, so that's a quick summary of what I feel like I'm fighting with. Is I don't feel like I have confidence in a setup.
Okay. Couple things. Yeah, going over your trades, that's kind of what I felt when I was looking through, not being there at the time that you did them, and seeing all the ancillary stuff in regard to it. It just looked to me that that's the way, as you were doing them, that fear took over
big time
over objective thought, and I don't have the answer for you to get over that, but that takes time. It's not something that, like, tomorrow you think, okay, that's not going to happen again, and you go forward. It's a gradual, I call it evolution of trading, and that's what you need to do to get to that point. But you have to realize, too, that some things, well, case in point here, the late last fall through the winter into January, see, the tick was infallible. Every trade worked. And when you get a market like that, of course, that's where you get high probabilities. I think I told you whenever you were here in regard to stuff, it's funny, you'll get into a situation in the particular environment, and then everything works as it should. But once the environment changes and you don't change with the environment, then all of a sudden something won't be working, and that's a point might be with what you're looking at now. If if you get to 75% or greater, okay. Well, the way that works, and if you played back the tape, you probably heard in there. I know you asked me this question because I remembered at the time you'd say, well, so when's this going to work? When is it going to work? That whatever. And I said, it's not like a typical percentage type thing that, okay, you do 4 trades, 3 trades work, and one of them don't. You'll go through and you'll have 20-some trades, and they'll work, and then all of a sudden you'll have 4 or 5 that don't work. They come in droves. You go in streaks, and then it turns. But when it turns, it's not that the trade is not working. That trade is not for that environment that you're in. That's always how I gauge things. If I go into all my trades that I have, the different setups and things, of course I expect them to work and I do them, or I wouldn't do them, obviously. But when I'm doing them and they don't work, I don't look about the trade being wrong. I'm never fearful of a trade. I guess there's the situation. I'm fearful of the environment changing and me not being aware of it. So maybe that's something that'll help you a little bit. That's why when I do the daily ritual every day, when I'm looking at stuff, I'm first off looking at what type of environment I think it is, and then given that environment, that's the type of setups I'm looking that'll work in that. And case in point, we've had here in 2019 when the Fed changed their spots, so to speak, here now, and they're not as hawkish as they were last year. Now they're dovish and whatever. So that makes it for the market to have rallies more. And whenever they change it, then you'll get into neutrality period where the market doesn't go up much, doesn't go down much, it just stays in the channel. And that's what you have to be able to, I guess, stare it out and doing your daily ritual and knowing what type of market it's going to be. Now, having said that, let me ask you, do you feel each day when you go in that you have a feeling of what type of market it's going to be?
Yes and no. Again, what I started tracking also is what I call a pre-market call. Like, okay, at opening, what is the likely direction that it's going to start off at? And I've started journaling in there that I said, okay, we're likely due to overnight activity, due to the way the VIX closed the day before, whatever. I may say, okay, yeah, we're likely to shoot up out of the gates. And then also some of that's with the pre-market activity that I'm seeing, with the bonds or the futures, and then some of the Dow, the 30 stocks in the Dow there, kind of looking at the pre-market activity on that. So I'm starting to look at that and say, okay, what is the likely direction of this in combination with all my everything I'm doing on my daily homework. And I've added some things to the daily homework in addition to your questions you had there. Like something I included in there is, okay, what's the VIX at and what's the trend at. Not using those as saying, okay, just because the VIX is down at 14 something now doesn't necessarily mean we're gonna have a down day Tuesday, but it could increase the probabilities of that. So.
Okay. When you go in, when do you do your first trade of the day?
Well, the one I've been evaluating has been the first pivot back towards central pivot. So whenever it hits it, a lot of times it'll hit it anywhere. It was hitting it anywhere between, 9:35 candle, towards the end of that candle to 9:45 or 50. A lot of times it'll hit that first one. But like I said, I've been I've got it here on my sheet. My pre-market call, I started looking this back at February the 4th. And right now my pre-market assessment that says, okay, the market's likely to head this direction, Right now, and I haven't traded that yet, but after 11 trades, right, it's an 80% system. But 11, me tracking it for 11 trades, I don't feel confident enough in that to take that. But so far, it's an 80% system. I had one would have given me a 3/4 point because 20 minutes would have expired. 2 stop outs at 6-point loss, and the rest of them were 3-point gains.
Okay. Now you're looking at just this period of time that you mentioned before 10 o'clock. Is that all you're looking at?
Well,
at that time?
No, let me. There was two different things there. One was the my first trade that I've actually put on has been the first pivot back towards central. So those have happened. Those happen typically within the first 15, 20 minutes of the day. That's one aspect. The second aspect that I've been looking at since February the 4th that I've been kind of tracking to say, okay, based on my homework that I do, which direction is the market likely to open? And if I enter at opening, basically the closing of the 9:30 candle and the opening of the 9:35 candle, and I put a directional play on, what are my probabilities? And that's the one that I've only been tracking over 10 trades, not 11. 10 trades was Friday. 10 trades, 80% if I would have taken those directional plays. But I don't feel confident enough in my assessment to be playing that yet.
Okay, well, what made you take that time period to use that for a directional play? I guess I'm curious in regard to that.
Basically, just based on the homework, the overnight or the homework that I do about 4 o'clock or 4:10 Eastern time. I usually sit down and go through the majority of my questions, and then the next morning at 5, I guess it'd be 8 o'clock Eastern time, I go back over and do kind of, okay, what's happened overnight, where's the DAX at, where are all these other things at. So that, based on that homework, that's why I'm determining that. What are you asking? Okay, Greg, that's great. You got an 80% system, but why are you entering there? Other than the fact that that's what I'm kind of calling a direction on. And I went back and listened to your audio, and it sounded to me like you look at that and you say, okay, let's let the market open and kind of wait for the steam to run out of the tick before you take your first directional play.
Well, do you recall in listening to the tape, that one of the setups that I gave you was that generally from 10 o'clock on Eastern time, the bias is upward?
Yeah.
Do you recall that?
I do.
Okay. And then do you recall that I talked about, we take readings every 15 minutes.
Yep.
And we assess what those 15-minute periods are. And one of the ones that, and I have mentoring students of mine that do this just to get their, I guess you'd say, their confidence back and get their traction, so to speak, get their footing underneath of them, is to just go in at 10 o'clock. And I'm just asking you if you've done this at 10 o'clock, that you decide, all right, based on your daily ritual, I think that it's going to be a potential for an up day, okay? That you do that assessment, then at 10 o'clock, and you just go long the best you can do at that particular time. Now, I'm just giving you a generalities. You got a lot of different things to look at, but that basically is giving you time. And then between 10 to 10:30, you should be able to access during that time if it is or if it isn't. If you don't get strength during that half hour there, or even out to 11 o'clock, then something's different than it ordinarily is. And the majority of the time, Greg, now you saw in late last year, though, November, December, that turned into a bear market, a pretty bad bear market there. So obviously that wasn't going to be the period of time that would be up. That would probably be a time when it would be down. But if you think your daily ritual and you evaluate it, and you were talking about your directional play, that ordinarily between 10 and 11 o'clock, now this is universal, that the market should be on its way up. Now, having that in your hip pocket, and this is something that might help you a little bit, because I think your mechanics need a little bit of work too, that you get into that trade, and then you start your evaluations and look what it's doing over that period of time, and just see how that operates for you. Now, have you done that or not?
And I don't know if this is answering your question exactly, but what I did was I looked at 20-something days where at 10 o'clock, if at 10 o'clock, now this is not taking into account waiting for a setup or the tick to register a higher low tick and get ready for a reversal to go to the upside or anything like that. Just at 10 o'clock, said, okay, if I went long at 10 o'clock, what is this doing? It was a 33% system.
Okay, now when you say that, what do you mean? I don't follow. You get 30. See, you're using the term system. I never use that. But 33%. What do you mean by that?
Well, and this is not the right thing to look at. But I was just looking at saying, okay, if I went long at 10 o'clock, click buy at 10 o'clock.
Mm-hmm.
What will that produce me?
Mm-hmm.
So that's what I'm referencing to a system. I mean, that's not a system. It's not a good thing. But I was just evaluating, saying, okay, if I went long at 10 o'clock, given it 20 minutes, where's it at the end of 20 minutes? Have I reached my 3-point profit, my 6-point loss, or do I close out the position at after 20 minutes? And it wasn't giving that. Now, the overall direction, obviously, since January 26th, we've done nothing but climb.
Mm-hmm.
And, and there should be something in there to look at to go long around that time, other than just the 10 o'clock candle, obviously.
Well, when you're talking about this, you say 33%. What period of time are you looking at on that, Greg? I mean, has that been the last 6 months, or how long of a period were you looking at that?
No, that was only that was just under. It was just under 30 days. It was 20-something days. I ended up deleting it off my Excel spreadsheet here because I thought, well, I'm almost at 30 days, and that's not, it wasn't working. So.
Okay. Well, what I'm trying to ascertain is, when you were doing this test and what period of time you were doing the overlay on it. I didn't know how many days you put into it for your assessment and going that route.
Yeah, I mean, really, and you tell me if this is right, but I look at it and say, okay, if it has decent results after 30 days, then it's worthy of continuing to evaluate to 60 or 100 days. If it does not have decent results at 30 days, I think it was far enough into it that I said, okay, let's assume every other trade between here and the 30-day period is a win. It was still under a 70% under 75% system, and that was assuming that every other day was going to be a win, and that's why I deleted that out of my Excel spreadsheet. But I look at first, just kind of looking at, okay, 30 a representative sample of taking those over 30 trades, and then I kind of evaluate, okay, is this something worthy of continuing to pursue or not?
Okay. Well, maybe this will help you out a little bit. I don't know if you're getting confused on how to take your sampling or not, but the 10 to 10:30 to 11 o'clock, taking in the full hour and then dividing it into 15-minute segments. So what you have to do, I don't know why you're doing this 10-20 thing. I can't figure that one out. But anyway, because you're supposed to be taking readings every 15 minutes. So why are you doing this 10-20 thing?
Oh, no, you're talking about the readings?
No, didn't you tell me, or did I misunderstand that you say at 10 o'clock, you were taking the sampling, I take it, and correct me if I'm wrong, that you were looking at 10 o'clock, then you were looking at 10:20, right?
No, yeah. No, that's 20 minutes in the trade. That's totally different from my every 15-minute reading.
Well, it isn't. If you're looking at 10:20,
same time frame. Yeah.
You should look. See, here's the way I view this thing, and maybe this is a way for you to interpret a little bit different. I do this every day, so it's just same thing. Between 10 and 10:15, the market should be higher. That's ordinarily the case, and more often than not, it'll be over 75% of the time between 10 and 10:15. It's going to be up. Now you got to understand this, Greg. That means that say it's at 2,700 at 10 o'clock, and at 10:15 it's at 2,702. Okay, that's a plus during that period of time, just so you could take apples to apples. All right. If that's the case, then I mark that down and look at it. I say, all right, the bias is up over this 15 minutes. Then I look at the strength of it, how much it is or whatever. Going for 2,700, 2,702 is not that much, but it is still a plus bias. So that feeds into the sampling, is what you're talking about in regard to it. Now, having seen that, then I'll look at it and I'll say, all right, this is a good bias time, that therefore it should be bullish over this period of time, and then I log that. Now, what I'm trying to do is ascertain if that's what you're doing. Or how are you telling me you went back to this? You said it was 33%. 33% of what? I don't figure out what you're talking about.
Yeah, that was that was just saying, okay, if I go back and look at the 10 o'clock candle for the last, how many days, 10 o'clock, and if I was in the trade for 20 minutes, and I close out the position after 20 minutes, and that's either. And I wish I would have kept it now, because I'd go back and look at it, because I had little notes on there. The 10 o'clock candle opened at such and such here.
Is 33% your percentage of wins and losses? I think he wants to know, what is your 30% representing?
Oh, like I said, that was going back and saying, like if I went back and looked at the chart, said, okay, on a 5-minute chart, if I went long at 10 o'clock, and I give that trade, I set my timer 20 minutes later, and I'm out of that trade after 20 minutes, is it going to be a win or a loss?
Well, see, you're not taking your 15 minutes as the period of time that you're supposed to be looking at it. You're taking 20 minutes. And I think I understand why you're doing the 20 minutes, is because you've got it in mind that it should work over the 20 minutes, but the situation you're looking at is that at 10 o'clock, the market from that period of time till 11 o'clock should be up. I've done many, many years of this research. That's something you don't have to do. This is something, that's why I was asking how many days you've taken that in. But the evaluation that you have, here's the steps you need to go through. Number one is, okay, you do your evaluation, you do your daily ritual, you ascertain and you look at it and you say, I think this day should be an up day, okay? Now, by that definition, what that means is it's going to be an up day from where it was yesterday till the end of the day. That's all you're looking at there. That's the definition for that. Given that environment, Greg, between 10 to 10:15, the market ought to be positive. From 10 to 10:30, it ought to be positive. From 10 to 10:45, it ought to be positive. From 10 to 11 o'clock, it ought to be positive. So you're taking these readings. What I'm trying to do to help you a little bit is get the feel of the market during that time. If that isn't the case, then that's an aberration, meaning that ordinarily you're going to have, literally it's more than 75% of the time, that it should be higher in the first 15 minutes, second 15 minutes, third 15 minutes, fourth 15 minutes. Okay? If it isn't, then you look at it and you say, wait a minute, this isn't a positive period of time, so therefore I need to look at another situation here and say this isn't going to be a bullish day. It could be a banger day, back and forth, and then take trades ascertaining that in regard to it. I think it's messing you up because you're looking at the 10 o'clock and then at 10:20, and I don't know what you're taking for your evaluation in regard to that. Are you taking that it has to be up X amount of points, that it has to be up? Does it has to be down, or how are you establishing between 10 and 10:20 that it is or is not working?
Did it yield 3 points during that time, or during that time did it drop down at least 6 points?
Well, what if it doesn't go up 3 and it doesn't go down 6? How do you evaluate that?
Then closing it out at the end of the 20 minutes, where's it at that point?
Okay, I see what you're doing on the thing. All right. Well, the thing is with that is you need to look at it and take the 15-minute intervals because, well, number one, the computers are set on 15-minute intervals.
Okay.
So they don't care about 20 minutes after 10. They're looking between 10 and 10:15. Okay? And during that period of time, if you can tell the market, and I know you watch charts, so you're seeing the thing either move up or sideways or down. That's when you need to do your evaluation on it. I'm just giving you one setup that I think you could probably make a living just doing it. But I think what you're trying to do is, if you're trying to make 3 points on it or lose 6 points and you're taking it off after 20 minutes, why are you doing that? That's my question to you, and I'm asking you not to tell me. I'm asking you to tell you, because during this period of time, the bias should increase. So what I'm saying is, at 10 o'clock, you get into the thing, for example, you look at it at 10:15, and say again you bought it at 2,700 and it's at 2,701, but during that period of time, you never made 3 points. Okay, you're still in the trade. All right, but it is a higher bias than what it was at 10 o'clock.
Yeah.
Well, then it ought to progress from there, Greg, and I'm just giving you one setup. Don't confuse this with other times. You're just looking at this, and you can see if it is going up or if it isn't, okay? So if it's progressing that way, then you get into 10:15 to 10:30. That ought to be a stronger period of time because the bias is still up. All right? Now, here's where the time is your friend or isn't your friend in regard to the situation is. The time should be your friend in regard to this. You mentioned this the other day when you sent me the one note on it. The time should be your friend during this interval time, that each segment between 10 and 11 o'clock should be a higher than what it was the previous 15 minutes. If it isn't, then you don't have a rally point here. You don't have a positive bias. And that's what I look at. And then that's when I'm looking for exit points. As long as it's still going in the right direction, where we say, okay, it's not moving as fast as I want, but it is moving in the direction I want. And the reason I'm pointing this out to you, it's not, I think you're doing a hard and fast on it. It needs to do this in this time frame or whatever. You need to see if you're on the right side of the market as you're in a situation. That's the whole idea of all the setups you're doing. I've taken all the work out of this. You don't have to do a sampling of this. You don't have to look at 30 days trade. You don't have to look at 50 days trade. You don't have to look at 3 days trades. Those setups that I gave you, they're all 75% or greater. And if they aren't, then you want to see why they didn't work during that period of time. Then when they don't work, I say, okay, what's going on here? Is there a news item that's changed it? Did I evaluate overall in my daily ritual and evaluate wrong or whatever? the setups are not what you're grading. You're grading the environment, and maybe this will change your thinking a little bit more than what it has before. You know what it should be, and now you're evaluating to what it is.
Yeah.
Does that make sense?
Yeah, you're absolutely right in the fact of I'm looking for hard and fast rules that says 10 a.m. you enter. It should go long. You should have your 3 points. If you don't, and by 10:20, if it's down under where you got in at 10 o'clock, but maybe at 10:15 it was up. I don't know. I'm doing hard and fast instead of evaluating the environment. That is absolutely correct.
Well, one of the things when you were here, I remember telling you, I said, you're looking for a black box approach. You've got to get that out of your mind. You've got to feel the market as it goes along, because you got to remember all these guys that are trying to do algo trading, computer-generated program type thing or whatever. If that works so well, they just preset their market, preset their trades, and just roll in the dough all the time. Well, obviously it doesn't. There takes a little more of interpretation in looking at it overall, which is what I'm doing over the period of time. So I'm looking at this thing. You're trying to make money, okay? You got to keep that in mind first. Doesn't necessarily mean you're going to make 3 points, because we haven't even talked about you doing your entrance. We're talking about you just arbitrarily doing it at 10 o'clock and then feeling out what the market's doing. So if you do it, and see, this goes back, there's more ingredients on this thing. I don't think you're an innie anymore. I don't, because what I'm seeing when you're sending back to me, I think you're an outie more than you're an innie. So therefore, you're going to have to research more in regard to what you're seeing before you enter into a trade, which is fine. I told you that personality, you're either one or the other. I think when you were here, I think you thought you were more of an innie than you were an outie. Now you're seeing that you're more of an outie rather than an innie, and part of that is because of your confidence level in regard to that, but that always surfaces. So one thing you need to do is take that 10 to 10:15, and that's just an arbitrary interpretation of what the day is unfolding, okay? Mm-hmm. And then every 15 minutes you look at it, and during that window of time between 10:15 to 10:30, say it goes from the 2700 to 2702, you look at it and say, okay, it is higher than where it was at 10 o'clock. That's what it should be. Therefore, 10:15 to 10:30, it ought to continue in that direction. But if it doesn't, that tells you that you need to get out of this situation you're in, because it's not carrying the momentum that it had the first 15 minutes. You see what I'm saying?
Yeah. And that's and to try and relate the way you're saying it to my brain, that's saying, okay, 10:15, yeah, you haven't hit your 3 points, but the overall trend is up. Hang in there. You don't have to jump out at 20 minutes. Leave your stop loss at 6-point stop loss. But then from the 10:15 to the 10:30, if I see the environment's changing, then look for a window to get out.
Yeah, you're right. What you're doing is you're feeling it along. That's the number one thing that I want to emphasize to you. You're massaging, you're feeling, you're getting the sensitivity to the market during each of these 15-minute intervals, okay? And if you see the first 15 minutes, you look at it and say, it's going up, it's going the direction I think it ordinarily will do during this time frame. Therefore, give it some time. And then from 10:15 to 10:30, you're looking at it, whoa, it isn't anymore. Then you're looking to exit the best you can. Now, during those times, and again, you're doing this overlay, I mean, you're trying to get 3 points on the thing, and I want you to stick with that arbitrarily. if between 10 and 10-15 it moves up 6 points, for example, well, you've already made your 3 points on it, so it really doesn't matter, but it did move that amount. Well, that's obviously a stronger move. When you don't get the 3 points in the first 15 minutes, that's when you should pay closer attention to it and say, this isn't moving as strongly as it probably should given this window of opportunity, but still is moving that way. So maybe the next 15 minutes it should do better. So what you're doing is you're putting this thing on the hot seat, so to speak, is that you guys better get going here between 10:15 or 10:30. You had your opportunity and you're not moving like you should, so where's the bulls at, that type of thing. And that's how your mind needs to work, Greg. Whenever you make the 3 points pretty quickly or whatever, that doesn't take any thought process in regard to it. You let it go. It worked over that period of time. One thing I noticed when I looked on your trades, I think you overmanage trades. You're trying to be too precise on everything you're doing, and it's taking you out of trades at less than opportune times. And part of that is you're scared. Yeah. And everybody's scared. Don't take me wrong on that. I mean, I'm still scared, and I've been trading 40-plus years. But I'm scared of situations doing things differently than the percentage dictates that they should. That's what I'm scared of. I'm not scared of the setup not working. The setups work. The environment might change.
Yeah.
There's the two things. Like, when I put on those trades on the advisory or whatever, that's the other thing I was going to tell you. I don't want you to monkey with those. Those are not trades that you're managing your doctoring. I gave you those and told you to do them because I want you to start healing your account. And so just let those alone. These other trades that you're doing on your own volition, your own discretionary trades, manage those, and that's fine. What you're doing, you're going to learn from that. But these numbers that I'm giving you, the tick trades require no management. They require you make 3 points, you lose 6 points, and then you got the time intervals on them. But just let them work the way I put on there, and that way you won't overmanage. Like the one the other day that you sent to me, you took a quarter-point profit on that when I realized 3 points.
Yeah.
See, you're doing overmanagement on that, Greg, and you're conservative in what you're doing, but quarter-point profit, again, it works out in the wash. You got to take a lot of quarter points, to make up to 3 points. That takes 12 trades to equaling that when you're doing quarter point. Now, I know what you're looking at, but if you don't like it over the period of time, you try to get out the best you can. Don't let those stops take you out. Because if you remember on the audio, I talked about stops in your trade are crutches. And when people start doing that and letting those stops take them out, you got to think in your mind, you should not get stopped out more than 5% of the time in any situation you're doing. And if you're doing it that way, your stops are properly administered on a timely basis.
Yeah, on that advisory trade though, we were 16 minutes into the trade, and
that has nothing to do with this. These advisory trades are very straightforward, and I have to do them all the same way. 3 points profit, 6 points stop. Doesn't matter if you're in an hour, 2 hours, 3 hours, whatever. That's what they are. And that's how they're going to work out in regard to it. Last year, I don't know if I told you last time I talked to you or whatever, we compile every one of these trades, and where last year, you would have made 50. If you'd only done the advisory trades, your account would have been up 50%.
Yeah.
That's the way it was. And the percentages on them get upwards of 80%, sometimes over 80%. But when you start doctoring them, your percentages are all going to be all whopper-jawed because you're not going to get those 3-point winners. And so it's either or. At the end of the day, you stop it out. That's one type of trade that you're doing, and that's the most apropos to black box trading that I'll ever present to you, or probably probably ever see. There's no management to that whatsoever. You're trying to take that advisory trade, and then you're trying to manage that. I don't have that liberty to do it because I'm putting it out on the advisory and the people that are following that thing. So if you notice, I always pertain to what happened during those periods of time, and it either hit my 3 points, hit the 6 points, or at the end of the day, I'm out. Now, I don't know how much you've watched them or how close you've been. Hardly ever are we in a trade at the end of the day that we have to close it out. You know, of course, I've been doing them for 20-something years now on the advisory. They're either going to hit one or the other, and generally, and then they fall into that percentage of greater than 75%. So I don't want you managing them. Okay. That's screwing you up big time, because I'm doing those at 8 o'clock in the morning and giving you a recommendation in regard to that. I've already ascertained where the pivots are. I know where the ticks should be at that time. If they present themselves, I do those trades, and that's how it works.
Yeah.
Okay? You're trying to micromanage them as if the environment at the time that they occur should be managed. Do you understand what I'm saying?
Yeah.
But the discretionary trades are the ones that you need to manage in regard to that, because you're doing them for whatever rationale it is as it appeared to you. In other words, that the observation was seen, and then you did the trade, and it happened at 11 o'clock or 2 o'clock. Doesn't matter when it happens in regard to that, then you're managing it in regard to that. But the other one you have to accept to see it skews up everything, Greg, if you don't stick to what the parameters are.
Yeah, yeah.
So anyway, the only reason I told you to do the trades was, well, there's two reasons, I guess. One is for you to learn from them that you're seeing. In fact, someday I'll welcome this down the pike. You'll call me or send me an email and say, you know, Mark, I know why you put that recommendation on. I know why you're looking at that particular situation. I finally figured out that, and I have some people that's been on a long time on the advisory. They'll tell me ahead of time. They always, at the beginning of the day, they try to figure out where I'm going to put the trades in at.
Yeah.
And see if they can front run me in regard to that. You're not there yet, Greg. That'll take a long time for you to get to that point. But that's the idea behind that. So I don't want you to get confused. But your discretionary trades, as you're seeing a setup occur in regard to that, yeah, that should be managed. That's fine. But you need to evaluate your management on how you're doing on the trade, too. If you're stopping yourself out at a quarter-point profit or 50 cents profit or whatever you're doing in regard to that, and then you promptly see this thing go to where you would have made 3 points profit, you've really got to look at your management you're doing and saying, you know, I am really screwing this up, that I'm over-managing is what it amounts to, but I'm thinking I got to do this, this, and this. And I'll tell you why you're doing it, because you're just plain scared.
Yeah, that's true. It is true. I'm still losing money, you know, and Rebecca and I were talking, like, we spent a lot of money to go to Mark and to, you know, try and get on the right path. And the fact that I'm still losing money, you're absolutely right. It's still scared. I did download a screen capture where I'm recording the whole day. You know, I'll stop it during lunchtime and start it back up after lunch. But I'm recording all day, and it's been interesting, me going back and looking at what I was doing. You know, because I get tunnel vision still when I'm in a trade, and then to go back after the day and like fast forward to the point where I entered the trade, and just watch what my mouse is doing. And I printed a sign that's sitting right here. It says, "Don't touch that mouse, no excuses." Because I watch myself, and I've even watched that, you know, 10 minutes into this, 15 minutes into it, I'm trying to pull my stop loss down from 6 to 4, and then I take it back off and I put it back at 6, and I'm still doing that. And for me to watch it on the screen and go back like, okay, why was I even doing that? This wasn't even, you know, 20 minutes into it. Going back and now looking at things, okay, the bonds were doing this, and the DAX was doing this, and the tick was doing this. Why was I even messing with that? I'm hoping that helps me to go back and be able to review that also.
Well, what you're doing in your mind, and this is how minds work, is your focus, your emphasis, and your time consumption is taken up with messing with the stop. And if you go back to the tapes on what I talk about, I only have a stop in, a physical stop in, as a catastrophe. If you remember, I call that a catastrophe stop, which is a 6 points.
Yep.
And I don't monkey with that. Once it's in and it goes on automatically on mine, then that's there. But then I start managing the trade, but I don't manage it with that stop. If I don't like the trade and I look at my time and stuff like that, I'm looking at the best that I can get out of the situation. But I don't start when you start messing around with the time and pulling that stop's going to take you out because you're putting more time into that than reading it the other way. I bet you would improve on your trading at the time you get worried about your stop if you would look at your situation on what it is on the actual at that particular time and say, maybe I can manage this thing to make a little bit more money on it and forget about where the stop is, just taking what I got here. And what I mean is, okay, you're down or you're up, it doesn't matter what it is. You think, well, I'm going to move my stop. As soon as you start moving your stop, it almost seems like it's a magnet, and the market starts working toward there.
Yeah.
And it's just that feeling you got. If you don't, myself, if I ever think about not liking a trade, then I'm really in there to try to manage it. But it's just the opposite of the way you're thinking. I want to make more money off that trade, not less. So if I'm in and I'm up 1.5 points, and I say in my mind, I don't think this is going to get to the 3 points, but if it gets to 2, I might take it off in regard to that. See, I'm not looking at moving the stop, and I'm up 1.5 points, and then all of a sudden it moves against me, and I'm up 1 point, then you get more scared and all that stuff. I'm looking at it, okay, it's moving the way I want it to, but it isn't going as far as I want. Therefore, time's not my friend, so it moves to 2, comes back down to where I'm up 1 point, moves to 1 3/4, comes back down to where I'm up 1 point, and say, this thing's not doing what it should. I'm going to do the best, take my profit, and go from there. That's how my mind works. I don't try to lock in or I don't move the stop at all. And I look at my trades over the month on it, and I see if I get stopped out for 6 point loss one time in a month, it's bad. 2 times is unacceptable to me. Then I go back and look that I misread the environment. Never look at the setup. I know the setups work. No. I misread a setup and put it into an environment where the setup is not conducive to. In other words, a bullish setup to go long, for example, and it's a bearish market. What the heck am I doing? Sure, it isn't going to work in that. It's not set up for that environment. You see what I'm saying?
Yeah. And that's, with what you just said there, is that what you mean when you said, I say this all the time and it always falls on deaf ears. I make money on trades that don't work. Is that?
Yeah, that's exactly right. And maybe you're thinking, I don't know if you are or not, but I'm not making 3 points on every trade that I do in every setup. I'm not. But I make money. I look at it just the opposite on. Maybe I should answer it this way. I'm in a trade. See, here's the way my mind thinks. I go into a trade and I'm instantly in the minus on the trade. That tells me right away that I misread the entry point. That's my first thought that goes through my mind. Okay? So therefore, I didn't do it. It's not that the trade isn't going to work. It's just I misread the entry point. Okay? So, having said that, I already screwed up in my mind. So I look at this thing, well, I'm going to get 3 points out of it. Well, you might have got 3 points had you done the entry right, but you didn't do the entry right. Okay? So therefore, it goes down a point against you, or a point and a half, or something like that, I don't instantly start pulling down my 6-point stop. I don't even touch that because, and probably that's your thinking that you have, and it's normal thinking for young traders or whatever. Well, I don't want this to get away from me and everything. I'm looking at it, okay, I didn't enter very well. If it gets back into the red versus the black, or excuse me, gets into the black versus being in the red, in other words, goes profitable, my entry was bad. It wasn't the setup was bad. The entry that I had was bad, and then I look at the thing, okay, it's moving, and I'm in X amount of time, and all of a sudden, many times, and I think I told you this, you have to check the tape that you have on there, 99% of the time, your trade, whether it's long or short, will be profitable for you at some time.
Yeah.
That means a quarter of a point to your good is a profitable. So see, your entry and your exit points that you have or whatever, there is a window in there that you can capture that, okay? So I'm telling you that because it'll build your confidence. And if you look at the trades that you're in, and I don't know if you record this, it might help you to do this, but I'm doing this all the time. If I enter a trade, go long at 2,700, for example, and it goes up to 2701.50 or something like that, then I'm going for the 3 points. It comes back down to 2,700, goes up the next time, 2701, it doesn't go to 150. I'm really scrutinizing that, and I'm thinking, whoa, this thing is not going as high as it was before. The energy's going out of it. Now, that trade might not be working because time is not my friend. That's how I'm looking at it. I don't even think about the stop on the other side. I think about where it's at that particular instant of time. Would I buy here? And I tell myself, no, I wouldn't buy here. Then why in the heck am I staying in this trade?
Yeah, and your buy here is looking at the tick in relation to what the price action is doing. When you entered in, it immediately went against you, and then you're looking at that tick to say, whoa, I had the bad entry. This environment is a sell environment, and I bought.
Right. Yeah, it should have. It's not to say you won't go into the minus on your trades, because a lot of trades you will, but if you go into an entry and immediately you get pulverized on the thing, and by pulverized, you're down 2 points instantly on the thing.
Yeah, in 30 seconds.
Thinking, oh, geez, oh, man. Now I got to make back 2 points here just to get back even. And you know how difficult it's going to be. But I don't look at buying, going long at 2,700 and it's at 26.99 2 minutes later, whatever. Man, that's no biggie to me.
Yeah.
Because, okay, the volatility at these levels is going to be doing that. But I look at how a market rallies and how it declines. So if I'm long and it's rallying like it should, even if it takes many minutes to do that, I look at it and I say, the bias is up. And I know you can read it well enough to see that. You're saying, this thing's starting to make progressions because I know you watch bars. So when you're watching the bar and the next 5-minute bar makes a higher high, saying, that's okay. But if it doesn't make a higher high, that's bad news.
Yeah.
So,
Yeah. That's because I've had some that I've been in, and they'll instantly. They'll drop 2-3 points. Almost in the first minute, and those are the ones that I'm like, oh my goodness, I think I'm on the wrong side of this because it shouldn't have flown against me that fast. And I don't.
You're exactly right, Greg boy.
And I don't always get out though.
You told me something that should not be happening.
Yeah.
Your entry, whatever you're reading to get you in, I kind of suspect you're reading the bars on the chart for your entry points, and those things, if you're getting in wherever it is, and instantly you're in the red and in the red bad, your entry was terrible. In fact, you might, and remember one exercise I had you do is, and I've had this with other students, I say, okay, you want to buy here, don't you? Yeah, I want to buy here. I want you to buy 1 point lower than where you're at right now. Well, I'll miss the trade. Then you just miss it.
Yeah.
And you will be surprised how many times you're buying at 1 point better than you wanted to buy on the thing because you're too impulsive. Wait for the market to come to you.
Yeah. Okay. Yeah, it's more about reading the environment, and that's I will say this. It more and more I do find myself watching the price and the tick more than the candles. Matter of fact, I rearranged my screen where my candles are on the left-hand side of the screen, and my tick and my matrix is right next to each other. And I find myself trying to watch the matrix and the tick more than just the candles, because like for instance, an engulfing candle. Well, there's a lot of times that I saw this last week when I started observing this, specifically this last week, that I saw that, wait a minute, this just lost energy up here, and if I'm entering in down here at the close of this engulfing candle, well, that's already a point and a half, 2 points that had I gotten in watching the environment instead of watching the candle, that I just gave up there. Right? Better entry.
Well, good boy. I'm glad you said that. Now you're telling me right there you're making progress. That more that you just said in this last couple sentences means more to me than all our other discussions, because you're finally seeing the forest for the trees, and that's what you need to do. You decide what my mind sequence is this. I decide I want to go long. Now I'm going to go long at the best price I can. And I have trouble teaching my son, for example, years ago. He said, well, Dad, it's set up. We got to go long right here. I said, no, we're going long here. Yeah, but that's not where it's at. I said, that's fine. I'm going to pay my price, but I'm not going to be in. And then he would be amazed as it unfolded, it would get to my price. And every time I'm saving a little bit of money on my entry point. But see, it doesn't bother me, Greg, if I miss the trade. There's other trades will come along.
Yeah.
So I'm always trying, and that's probably what I would make you do if you were trading alongside of me here in my office. I'd say, okay, and you would say, I want to buy here, Mark. And I'd say, okay, that's fine. Put the price in 1 point below where you just said you wanted to buy, and see how that unfolds for you.
Yeah.
I think you would be very surprised, because remember, what you're trying to do is take emotion out of your trading. And the number one thing is quit monkeying with that stop. Jeez, oh man, that's going to consume your mind. The guys who trade with stops don't make money. They just don't. And guys argue with me all the time about that. And I've seen their trading and stuff because it consumes their mind. They're letting that stop dictate what they do rather than reading the trade and making some money here. And you're exactly right. That's why I make money on a bad trade. I look at a trade and I get mad at myself if it moves 3 points and I didn't get the 3 points. Then I look back at it and say, okay, was that impulsive? Was that emotional? I got out. And if I can honestly say, no, it wasn't, that's fine. Because it could have gone up to 3 points on a news item, the environment changed or whatever. But the trade I was in, given the circumstance that it was in and the environment that I entered that trade, was to make me 3 points. And if the environment was not conducive to do that, I want to get to the sidelines.
Yeah.
See?
Yeah. Yeah. Well, one other thing that I was thinking of, because I've had, like I said, a lot of trades that go 2 points, and I thought, well, should I exit, half my position if it hits 2, and then hold the other half till it hits 3, and I know you said originally, like, hey, don't go messing with scaling out or anything like that yet, I think that if I take what you've said today, and if I'm reading it correctly, which is watch the environment. The stop loss is there that if it hits it, it hits it. But if it hits it, why did I enter that trade at that point? I need to be evaluating, did I have the right entry point, and read the environment correctly. If it's hitting my 6-point stop loss, that means I'm putting on the wrong trade in the wrong environment. Or, it may be the right trade, but it's been put on in the wrong environment. And I need to evaluate, okay, what is it doing? If it's just kind of toggling there around, like you said, up a little bit, down a little bit, that's not a problem. If it immediately shoots against me, that's a problem, and I need to be looking that building just caught on fire, and I need to be looking for an exit to get out of there.
Yeah, you're right. The one thing I just thinking on how I think when I'm up 2 points, I'm looking for 3 points on the trade, and I'm up 2 points. Okay, you and I are on the same page in regard to that. Here's the reality of what it should do, and also the probabilities. When it's up 2 points, and when you do hundreds of thousands of trades like I've done, you will realize this is the case. If it's up 2 points, you should get 3 points. So that tells me in my mind, okay, why am I thinking about doing something here now? Because the odds are it is going to get to the 3 points. So that immediately enters into my mind, calms me down. Here's when I start getting antsy. It's up 2 points, it backs off to where I'm up a point or something like that. The next 5 minutes, here's where the time comes into play. And I know you're watching these bars, but it moves back up, and the next time it's up 2 points again, but it isn't going any higher, and it's elapsed a minute or two from there and whatever. Now I'm looking at this thing, and I'm looking at it not because it isn't going higher, but because 2 more minutes has elapsed. So that's telling me the energy is dissipating out of it, and that's when I'll probably pull the switch and get out of the thing. That's how I'm evaluating it in regard to that. That's where the time element comes in, because I'm immediately thinking this thing should go 3 points, and when it moves that direction, that's fine. And I don't second guess at that point. But if it doesn't get to the 3, backs back off, then I see what the next movement is, because the next movement, and I give the market ultimatums all the time. I'm saying, okay, I'm up 2 points. I better be up 2.5 points on the next move up there or more, or I don't like this trade.
Yeah.
I'm not looking at moving my stop to that quarter point or anything in regard to that. I've got it there where, the catastrophe stop. I've got my mouse right there where that trade is, and I'm looking here. This thing better perform, and it better perform quick, or I'm out of this thing.
Yeah.
I'm not going to let it reverse, because it's going to take a little time for it to go from being up 2 points to where I'm in the minus column. Okay? And you got to look at, hey, it's up 2 points. It only has to go up a point more for me to go minus on the thing. It's got to go down more than 2 points. What's the odds here?
Yeah.
And you say in your mind, well, sure, it's got greater odds to go up another point than down 2 points in regard. But if it starts tottering a little bit here, going the other way, that's where the time element is. I don't give them time in regard to that.
Yeah, and that is watching that. Also, should be watching the tick, because I know I don't know. It looks like when the market goes up a point or 2 points, there's people jumping out. They're covering their profits. They're taking it and walking away, and that's where you get that toggle. A lot of times between 2 to 2.5 points, you'll see a toggle. Rarely does it just shoot immediately to 3. You'll see it go up and toggle. That you're also watching the tick there on that next push out. Okay, hit 2 points. It better go quarter. Better go through that with a little bit more, gumption the next time, and you're watching the tick on that.
Well, you're right, Greg. But here's what I do in regard to that. If it's up 2 points, it backs off a little bit, works its way back up, and the tick goes higher than it did when it was up 2 points before, but it doesn't go up more than 2 points with the tick being higher. I am off that thing so fast it's lightning speed, because the tick is actually showing more energy and the prices aren't. That's like a weightlifter trying to lift on his 10th rep 250 pounds. He can do it on his first, second, third rep, but when it gets to the 10th, he's getting tired, and that's what's happening here. The tick is exerting more energy, but the prices aren't responding. Boy, I'm off that, because as soon as the tick gives up, guess what? It's going to come thundering down. So you're right. I'm watching. I do. My eyes are more fixed on that tick, and then I got my mouse right on the price that's there or whatever, and I'm out very quickly on that. Sure, the tick can overrun, and maybe it's going up and it's higher than where it was, and all of a sudden it spurts up to plus 1,100, and I would have got my 3 points. But that's not the odds that it's going to do that.
Yeah.
The odds are because when it went higher than where it was before, the prices should have gone up, and they didn't. So
but if they stall,
therefore that's divergence.
Yeah,
and I don't like those.
Yeah, if the prices stall and the tick's going up, and the prices stall, then that's something's gonna happen there. Something's got to break. It'll either shoot through or it'll drop out. One of the two.
You're exactly right. It's going to increase the volatility because it's at a pressure point there.
Yeah.
And the pressure's going to give one way or the other. But because the tick's trying to exert pressure on the thing and it's not responding, I don't like those odds, because I know if the tick starts backing off, guess what? That sucker's going to fall through the floor, and then you don't get another chance.
Yeah.
So that's why I use the tick so much on stuff, because the tick is an overextension of energy. And when the energy's in there, in the direction that you want it to go, and it doesn't go, hey, are you an idiot? You moron, what are you? You know that this thing should be going up and it isn't, so what do? Get the heck out of Dodge.
Yeah.
See?
Yeah.
So anyway, I think I can tell you're watching things more carefully now. You're seeing what you need to see. You're realizing what you're seeing. Now the thing is, take action on what you're seeing and don't start to. I know what you're doing. It gets to that point. You're seeing this stuff. You think, maybe I better bring that stop up to a quarter-point profit. Well, guys, darn, do you mess around with that? You've missed your opportunity to take 2 points.
Yeah. Yeah. Yeah, and so the split bottom. If I saw that, I should. Matter of fact, I put it at. Well, I put it at quarter point, and then it kind of toggled there, and then I moved it up to 1 point, and then it took me out there. I mean, we're talking the advisory trade, and I know you're saying don't mess with those, but had that been my play, my management, I once I saw that double bottom, I should have just taken it, because I think it was closer to, 1 3/4 or something like that at that time, and I took 1 instead of 1 3/4.
No, that's right. And see, the way you have to look at that is you lost 3/4 of a point. If it gets to that point, see, the odds are when you get a double bottom like that, people think, well, it's going to go through, and it might. But the odds are of it going through are less than the odds are that it won't go through.
Yeah.
See?
Yeah.
And that's the way your mind has to be attuned in regard. And then everybody gets provoked because, oh, darn, I got out and it went through. Yeah. Never go broke taking a nice profit. And you need to think of it, then you go on to the next trade and go that route. And that's what I mean by time is not your friend. So if you're arbitrarily at 20 minutes and you're saying, well, I got to get out here, you're starting to manage the trade when you start to see these ingredients that should be happening to finish the completed cake, so to speak. In other words, it's up 2 points, it backs off a little bit. Don't go worrying on that. Tick comes down, moves back up. It's up 2 points here, and the tick is expanding, and then it moves up 2.5 points. Hey, it's still fine. You're okay in regard to that. But when you need to worry is if the tick starts moving up and the prices don't. That's bad news.
Yeah.
And same way on the downside. I watch the tick. If the tick starts getting worse and the prices don't, oh, baby. If I'm short, I got to get out of there because I know what's going to happen. As soon as the tick repairs itself and starts to get some stabilization, those prices are going to go up.
Yeah, yeah. Okay. Yeah, I am still trading scared. I realize that. I'm trying my darndest to try and overcome that, and the way I've been trying to overcome it is the Greg black box system, and yet I realize that's not the best method because, like I said, even observing this last week on the engulfing candles, there was so many times that I saw on the tick that it was losing its upthrust, and that was a good time to go short there. And then, sure enough, it printed an engulfing candle, and which is confirmation of that. But I could have gotten in a better position had I taken that. So, I want to keep working on observing the tick, observing the price action, because that is the system. That is the system. It's not a candle. And that's what I got to kind of convince myself of is it's not a candle that gives me my entry signal. It's the price action and the tick that give me my entry signal.
Yeah, I like to hear you say this stuff. You're starting to see, as I said, the forest for the trees on it. And over a long period of time of many trades, that's all going to translate to the bottom line to your favor if you're reading it that way. And that is exactly what I mean is that I look at that and I say I made money on a trade that didn't work.
Yeah.
And that's always what I mean about it. Just because it doesn't go up 3 points, because part of the time it would have gone up 3 points, or it did go up 3 points from where that environment was, but I bought it. My entry wasn't any good, and I bought a point too early, for example, on the thing. It goes down that point against me, and then turns around from that point and goes up 3.5 points. Well, there it would have made my 3 points, but it didn't make my 3 points because I entered a point higher. You see what I'm saying?
Yeah.
So
yeah.
I'm gauging this thing. Well, it should go up 3 points. Well, it did go up 3 points, but not from where you bought it because you didn't buy it right. And that's what I'm telling myself at that time. Yeah, I screwed up on my entry, and I'm always looking at both of them. I grade both sides. I grade my entry point. I grade my exit point. I'm always better on my entry points. I'm always bad on my exit points. I don't do as well on my exits as I do my entries. And part of that's my nature is that I try to buy or sell the best price I can on the thing, so I'm more stodgy with that. And on my exits, I want out of there because I'm scared too. And so I don't take as much as I am. So I force myself on the 3 points. But I don't get really antsy until the minutes start ticking off. Then I'm really there watching it really closely with my mouse there, and then the tick dictates what I need to do.
Yeah.
But I'm looking for a reason to get out at that time, but I'm not concocting in my mind a false reason to get out just because I want to get out of Dodge.
Friday, when we had that 9:30 candle that just shot up, pre-market, and then the 9:35, I waited, and then I saw the tick come. It came down, and then it pushed up to like 500 or 600. But yeah, it was making a little bit lower prices. Well, I jumped in there, and and then of course it went up and hit 800 tick on a lower. It made higher prices on the 500 tick, and then ended up pushing up to 800. I'm like, man, 800 would have been so much better entry point, and that actually took us over that pre-market high. And I got in under the pre-market high, so I had a bad entry on that. I got a point out of it, but in watching my tape on that, that's where I was like, man, watch that environment, and I could have had a better entry.
Yeah, well, you're right. You're seeing stuff. You're doing better. I can tell. I mean, I want to congratulate you on that. You're seeing things now that you need to see. Just take action in regard to them and realize, okay, it's in this environment. What's it got to do to be good for me? What's it not going to do to be bad for me type thing, saying, I don't want it to do this because this is bad for me. I want it to do this because this would be good for me. And you have the knowledge now that you didn't have before, Greg, of knowing the difference.
Yeah.
And that's good. Then you have to incorporate that into taking action.
Yeah, yeah.
So
Yeah, it's frustrating for Rebecca and I.
You're getting closer and closer, but I've seen this in other people, just not you, that they get to fidgeting so darn much over the stop and trying to move that and gyrate. They're losing the focus of where the trade is, and I get mad. I've tried everything over the years, but the thing is, and it just doesn't. As soon as I start evaluating, I say, "Well, I want to move this stop," and I'm thinking, "What are you doing? Start concentrating on the trade. Forget the stop. The stop's there as an insurance policy, so if your house burns down, you get your insurance or whatever. You're keeping yourself from getting killed. That's all that is, and that's the way to learn to fight another day and go forward." And the other thing too, and I mentioned in the advisory, I just kind of tell you, this market is getting thinner and thinner. And that really scares me because you'll get exaggerated moves now. And I'm pointing this out to you. If you want to go long, for example, and it spikes down real fast, you've already decided to go long, man, be right on those things, because it's probably just an instant of time that one of these algo traders or computer, they just dumped on the market and it's over, and then it'll snap right back. And you're seeing that in the market now, and that's a sign of a thin market. And you can make some good trade, but you got to be ready on those things. Say, wow, I should have been on that thing, and you're not ready. But it's just so thin. And also, on the other side of the coin, though, if it's going your direction, it might just spike for an instant to get up there, and you get a chance to get off. That's why you're seeing on the tick a little bit, nothing happened. I don't know if you saw the one there Friday afternoon. I think I sent you an email. We did that tick. It just touched plus 1100.
Yeah.
Now, I was right after 3 o'clock there and I didn't claim credit on that because I have that on there that after 3 o'clock I don't do the trades. Well, the only reason on that, on the advisory, is I cut it off at 3. I have to do that to be uniform all the time. But I did that trade.
Yeah.
And it worked almost instantly on the thing, because just for whatever reason at that particular time, it spiked up there, hit that tick, and boom, came right back down. And I don't know, we were only in the trade a minute and a half, and excuse me, had 3 points on it. So what I'm pointing out is this volatility, and I told Jill, I said, man, this thing is thin.
Yeah.
And I said, it's just ripping around here more than what I've seen. And typically in late February, it kind of gets that way too. So there might be, some more movements and stuff. Like you were talking about that crazy bar the other day right there at 9:30. I mean, it just spiked up. And of course, you notice too, Trump's talking a lot more now than he was previously.
Yeah.
And so that has a tendency to move the market some. So we'll just have to see. But the tick's been working very, very well here. We're just not getting tick very often anymore.
Yeah. Now bouncing between negative 600 and positive 600 is about all we've been seeing. Matter of fact, well, I know you have that on your CCT, but I'm surprised at how many days we've gone, and we've had, I think, two positive 1,000-day ticks over the last however many days. And it's just like, wow, this is crazy that we keep climbing on no tick.
That's right. And what you're seeing is an aberration, I call it. And one of these times, it's going to change, and it's going to change pretty darn quickly, meaning that I'm saying within the next few weeks, then all of a sudden you get a ton of minus tick. That's just how it works. And you look at it here, you'll have a day and it'll have 10 times that you'll have a minus 1,000, minus 1,100, minus 1,200, just down there, and they'll just pound on this thing because you haven't had any for a while, and it's like pent-up demand,
Yeah.
and it'll just pound the thing. So I would expect that would be the case, and we'll just have to wait and see. So anyway.
Yep.
Yeah. Okay. No, I'm taking spirit here out of our conversation, because now you're seeing things, and that's the spirit of trading. You're getting that feel, and the feel is what makes the difference between an amateur and a pro.
Yeah, I just got to stop losing money. I've just got to stop losing money because my wife and I, she's like, like how many more months do we have to go losing money before you get this figured out? But
Well, remember I told you my story is I went the first 5 years and I didn't make any money, but the key was when I started turning the tide, I started going and I would gyrate around zero. I'd make a little money, I'd lose a little bit of money, but my net for several months that I had there was right at zero.
yeah,
And I thought, I'm reacting better in here, and then all of a sudden it just took off. So I was stopping the bleeding, so to speak, but I still wasn't capitalizing on the good. And then all of a sudden it'll come. But you're starting to see it now, so that'll help out a little bit. But don't get so scared all the time on it that your objectivity's gone. You don't want to do that.
Yeah, you pointed out some good things, which is, put the stop in and forget about that. Focus on what's actually happening on the tick and on the price action. Watch that, and don't worry about the stop loss. It's only there if, Powell gets up and speaks or Trump speaks, and then it falls out of the bottom. Yeah.
Yeah, you're exactly right, Greg. So, now you're coming along. I feel a lot better about this conversation. I really do, and I'm being honest with you. You're starting to see what you need to see and everything. So
I was embarrassed. I really was. I was kind of dreading this because I'm like, you know what? I know I've screwed up. I was embarrassed about what I submitted on my trading there, and yet I want to face it head on. I want to take responsibility for that, and I've made poor choices. But I want to see the right things, and I want to continue in this. Like I said, I'm frustrated. I'm not discouraged, but I'm frustrated. Still, but yeah. Hopefully everything's going good, and I appreciate the shot in the arm, even the words of encouragement. That does help, and I greatly appreciate that, Mark.
Okay, no problem. No, I want you to succeed. That's important to me, and so sometimes maybe I speak a little harshly, but it's for your own good on not doing things that continually sabotaging yourself. Guy goes into the doctor, and he says to him, "What's your problem?" He goes, "Well, every time I raise my arm over my shoulder like that, it hurts."
Yeah.
He says, "Well, do that." He's raised up, that hurts. Well, then don't do it anymore.
Yeah.
So every time you're doing a mistake that's costing you money, don't do it anymore. It sounds simple, but I think when you get into a situation that this isn't the way it should. My entry wasn't good. I didn't react to the tick like I should have. Why am I in this trade? And that's what I constantly ask myself. That's always in the forefront of my mind is, why am I in this trade? It's okay, Mark. Or, you dumbhead, get out of this thing. You shouldn't be in it. And that's where it is. I'm not straddling the fence. I'm saying, would I do it here? Yes, I would. Okay, then ride with the trade. Would I do it here? No, I wouldn't. Then get out of the trade.
Yeah.
That's the thought process you have. But you have enough tools there. The tick will just make things a little quicker and a little more sensitive for you to help you a lot more. So anyway, and I've noticed the tick's working a lot better now. We're just not getting the examples of it happening as often as we did before, but that kind of comes and goes, so we'll see.
Yeah. Okay.
Okay. Well, tell your wife, it's nice talking to her and everything. Yeah. Nice talking to you, Greg, and I'll look forward to seeing you. The weather gets a little bit better and everything. It'd be wonderful to get out. But what you're doing, losing money, that really doesn't bother me that much because that's what happens. That's the way people learn how to trade. And no one that I ever know that's been successful was there any other way than that way, because then you learn where your flaws lie, you learn where your mistakes are, and you start correcting them, and then you feel better about what you're accomplishing too. And so starting out in the minus or whatever, and you're looking at certain things that you're doing them wrong, you'll say, well, wait a minute, here's why I'm losing money because of this. Don't do that.
Yeah.
So anyway, okay.
Well, we appreciate it, Mark, and I want you to know I constantly am telling Greg the famous words you said before we left your home. You said, you have to do exactly what I tell you to do. And I keep telling him, I'll say, if he's, does his, just a conversation we have and he'll be questioning something, I'll say, are you doing exactly what Mark told you to do?
Well, yeah, and the answer is no.
It's good advice. I'm not taking the credit for what exactly I say. It's what I realized that works.
Right.
That's what it amounts to. And I've met other professional traders over many years, and they do exactly the same thing that I do, and we've never even spoken before. But we both realized that trading, that in this circumstance, this is what you do, and in this circumstance, this is what you do. So we arrived at the same conclusion from two different locales in the United States and different backgrounds, but there's a certain way that you trade that will work day in and day out. And that's not to say there won't be days that it doesn't work, but if you continue on that trek over the periods of time, you will make money.
Yeah.
Well, thank you so much for your time today.
It does come down to the discretionary trading versus a trading system, and I've been so trading system oriented, and I'm starting to see that that's the wrong way. It has to be discretionary trading, and then I have to continue to learn how to improve on my discretion of the trade.
Yeah, I think you're already there, Greg. I think you're aware of it. You're aware of the situation. You're observant of it. I think now you're just not taking the action you could. You're second-guessing your action, and probably as a crutch, you're thinking, okay, I'm not quite sure here, so I better move my stop.
Yeah.
I think that's how your thought process are, rather than just managing the trades.
Yeah.
And that's what I do. And for me, maybe my crutch, I guess, I have that mouse right on that sucker, and I'm following it up, and I'm just ready to click as fast as I can on the thing. That makes me feel secure that I'm going to get out of this thing the best I can in regard just because of speed. And it's like I said, it's thinner now, but and I always view it this way. If I make a quarter of a point better than what it was when I started having indecision, that is a plus to me. That's the way I look at it. Just that little increment of time on that to make a quarter point's a quarter point.
Yeah.
And I lived on that when I first started trading on it, of making a little bit of money many times. I had a lot more energy back then than I have now, but I traded a lot, and I'd just be in a trade and out of it, make a little bit of money, and then every now and then I would get one where my entry was right on and my exit was right on, and I'd make the maximum on the thing. But see, when you're starting out, typically your entries aren't that good, and you're too early or too late or something like that, and that goes with indecision.
Yeah. Yep.
Yeah.
Thank you.
Okay. Well, take care. It's sure nice talking to you.
All right.
You too, Mark. You have a wonderful weekend, and tell Jill and Ryan we said hello.
Sure will. Take care.
All right.
Bye-bye.
Take care. Bye.
Bye-bye.
He called me from his house number.
You're something.
What's that?
Did you record all of it?
Yeah. Oh, yeah. You might want to hit stop. Unless you want. Unless you want.